with a disruptive technology as the battery electric vehicle, that transition is unavoidable. It will happen. It's more a matter of time and the timing to it.
Hello, Happy New Year, and welcome back to In Between Charges. My name is Mike Hawks, and I'm joined, as always, by my co-host, Kevin Spangenberg. Even though we're recording this before the new year has started, I think I just want to ask, because it's post-Christmas where people are going to be listening to this, or post the holiday period, and I wanted to, really check, Kevin, first time, any New Year's resolutions that you're committing to this year that you want to also share with our avid listeners?
So I barely know what I'm having for dinner tonight, and yet you're asking me a couple of weeks in advance what I'm going to set as my goalpost for next year. But 2024, my whole 2024 has been dedicated to the United States launch, right? Recording this from Miami. It's been a lot of work. We've had some successes. We've had some challenges. But from a professional sense, my New Year's resolution is to see thousands of chargers in the United States live, to see a thriving office here in Miami, and ultimately just kind of see the fruits of my and the whole team's labor over here kind of really result in a thriving market for Monta. And I am very optimistic about that. So that is my resolution.
Fantastic. So, see, you know this already, right? You're living it out there. You know what you want to build up to. And I think already it's been a flying start for us in the US. All right, awesome. So then on to the episode. Personally, I am super excited about this one, as it's fair to say that when we think back to 2024 in the EV and then also the EV charging industry, it has been a tough year for almost the whole value chain, from hardware manufacturers to vehicle manufacturers, and not less for day-to-day consumers themselves who have been battling with rising interest rates and inflation as well. But here in this episode, we also want to shine a light on our predictions for what 2025 has in store for the industry. And to help us do so, we are joined by Rikard Boije of Gennäs, who leads Implement Consulting's e-mobility division, working very closely with charging operators and OEMs alike across Europe. So we're super excited to have you on the show and here in the studio. Rikard, welcome.
Thank you very much, Mike and Kevin. Very much appreciate the opportunity to be here, and let's dive into it. Right?
Let's get started. Yeah. So can you maybe start by giving us a brief introduction into your experience in the EV industry and what you're focused on building over at Implement Consulting along with manufacturers and operators?
So born and raised in the automotive industry, the cluster in Gothenburg, and since a little bit more than 4.5 years, I've been managing our office in Gothenburg and also leading our e-mobility team globally. So what we do, we support clients in the whole value chain of e-mobility, helping them to design winning strategies and also help them with the execution of the strategies to create impact.
I think the conversations that you've been having over the past year will probably be pretty similar to some of the conversations we've also been having with our customers and people who are really trying to navigate which hardware to purchase, trying to navigate how changes in EV adoption will affect their business. But maybe let's start off with looking at where we've come from this year in 2024. And I think importantly, try to break down what has actually happened this year. It's been a tough year all around. Demand for EVs haven't quite hit the forecasted volumes, and manufacturers of both vehicles and then also charge points have been really scrambling to try to recover. But I think also there's been a lot of rhetoric around this being representative of a market slowdown, which I really want to unpack and get your point of view on. We, Kevin and I, and Monta as well, we have our theories on why this is, but I'd love to understand from your point of view how you would explain the trend in EV adoption that we've seen this year and witnessed in 2024.
Yes, so it's a little bit too much of a simplification to say that the market has slowed down. If we take China, for example, we see the very strong trend in the transition to electric, both passenger cars, but also on the commercial vehicle side, on the truck side. And they're definitely leading the transition and probably surprised many of us if we go back 5 years and was to forecast, the development in China. And that's industry play that they taken decision 10 years back in time to really drive the transition to electric vehicles. If we take the European perspective on that, we can unpack the different markets. And I think one way to view it is that if you look on the collapse in Germany and you exclude Germany from the sales figures, you're up 7% on the the BEV sales in Europe. So slowdown, if we can dive a little bit into the underlying logic, how the transition to EVs function and work, that's something that is happening market per market and segment per segment. So looking at Europe, you would probably look into what is happening in the different markets. Both Implement and Monta is Danish headquartered companies, and we've had a very strong market in Denmark, more than 50% on the BEV sales, and just a fraction of that is plug-in hybrid electric vehicles or PHEVs. So comparing that to Sweden, which is very different, we have seen significant uptake on PHEVs in Sweden compared to previous years. And coming back to our government in Sweden, cutting the subsidies, lowering the diesel prices, etc. It's quite a dynamic market we've observed in 2024. And UK is another example with the new regulations, and we've seen a significant uptake on the UK market. Also, a lot of activities on the commercial vehicle side in US. And Kevin, you probably know US best of all of us, but we've seen a steady growth in US, maybe not to the full extent and expectations we had on the market.
Yeah, I think your point on it being a different story from market to market is important to note, because it's not one simplistic story you can tell across Europe. It's not one simplistic story you can tell across the United States either, right? So if Germany and Sweden have fallen off a little bit of a cliff, Denmark, Belgium are surging ahead, right? And over here in America, it's a little bit the same, right? And Arkansas, Alabama, and Mississippi are not exactly on a rocket ship to EV adoption, but there are many states that are really hitting the upslope on that curve, and that's California, that's Colorado, that's Washington State. Actually, even here in Florida is the number 2 state in terms of volume of electric vehicles, but that's just because it's a state of, I think, 23, 24 million people. And when it's 6-7% of that, right, you're going to get quite a few electric vehicles. I think going into 2024, a lot of people rightly anticipated a gap year. There weren't a ton of new models coming out, and people did kind of see some of the writing on the wall with the policy gaps and everything. What I'd be curious to kind of understand, Rikard, a little bit, and you're talking to all your clients and everything, is this gap on the OEM side, right? So they got out ahead, right, and they expected a certain growth rate, and maybe that didn't materialize. And then it's, you see Volkswagen having to close factories and Audi having to close factories and people readjusting their targets and then pushing on the EU to, hey, maybe that 2035 was a little aggressive. What are we thinking about that? But when you talk to your CPO clients specifically, do we see that kind of direct connection from a slowdown in some markets, right? But still growth, just a slowing of the growth in some European markets. Do we see that slowdown kind of really directly feeding into the CPO business model and what they're projecting and everything? Does this kind of slowing of growth affect everybody in the chain, or is it more directly affecting the vehicle OEMs in your work?
The perception that we have a slowdown that creates uncertainty. And a lot of the client work we have done is building up a fact base in the strategy. How do we view the outlook in different markets, in the different segments, etc.? So for a charge point operator, the rolling population of electric vehicles and only the BEVs, if you're in the public fast charging domain, and both plug-in hybrid electric vehicles and battery electric vehicles, if you are in the whole value chain with slow charging AC, of course. But the rolling population is essential for a CPO. And when you have a discrepancy between what you have forecasted and what your actuals come in, that creates uncertainty. Investment plans are challenged, and a lot of the work we have done is preparing board material, discussions with investors, and that type of question. So I think many of your customers at Monta, the charge point operators out there, are probably facing exactly these questions. How will that impact their business 25 to 2030, and looking into the forecast on the rolling population and how that transition looks like. The new sales figures are extremely important, of course, but we have that time delayed when the rolling population start to pick up. So a new vehicle sold today will probably be around 10, 15 years, right? And hence the importance of continuing the trajectory in the transition to full electric cars and keeping the stability and the predictability of how that look like. So I think that's what many of the clients we work with look for.
We're kind of coming now into what 2025 will look like. But I think to get there and to help operators understand what it will look like, I think it's still really important to understand what has happened in 2024 and kind of hit this rhetoric about it being a market slowdown and what has actually happened. Because I think the figure that everybody keeps talking about is the sales growth rate has declined. And in 2024, that's true. But in terms of the absolute sales figures, Germany is still a growing market for both battery electric vehicles as well as plug-in hybrid electric vehicles. And I think we can talk a little bit about the things that we know. 2024 has been a tough year, not just for electric vehicle sales, but also combustion engine sales. Since 2017, I think the other part that's quite clear in Germany and then also in the UK is that electric vehicle sales are completely elastic to incentives, in Europe anyway. And so that's also had an effect this year. And then also, I would say kind of the third part, which is important to talk about, is the CO2 emission standards. We kind of briefly talked about this as well, kind of outside on the podcast, and how manufacturers change and adapt their strategy to this 5-year stop and go of CO2 emissions. And that will affect both the types of cars that they put out into the industry, the vehicle launches that they want to pause for the future year when they can have or when they are mandated to meet much tighter restrictions of CO2 emissions. And if you look back into the 29 and 2020 figures, there was also a market slowdown or a kind of dip in adoption different to forecasts so that manufacturers could then bump up their sales and hold back their first round of EV sales into 2020. And so I think on the whole, in the grand scheme of things, if you look at the year and growth rates in 2024, yes, it's been challenging, but in the context of how consumers perceive EVs, in the context of how policies are changing from private to infrastructure investments, and then these new CO2 emissions, at least in Europe anyway, there's a lot of other factors that are at play. And I personally see this rhetoric around market slowdown as just, it's not true. It's not real.
And I absolutely agree to your point here, Mike, because we often read the headlines in the newspaper and we mix up things that what is this in relation to the total industry volume in the market? What is actually the growth rate? And what is absolute sales number? So that's often getting confused in media, and that creates the uncertainty from board levels in many of these companies. And that doesn't help the transition, right? And we'll touch on the consumer sentiment as well. But to your point, the OEMs has delayed or planned many of the launches in the B and C segment for 2025. Exactly as you outlined here, we have the new EU regulation on CO2 emission. Volkswagen ID2 could have been out in the market already. For some reason, it's planned to be launched in 2025. And many other OEM players also has the same plan.
Rikard, how much do you think this is, I'm trying to be provocative here, but just like bad planning and execution from vehicle OEMs, from these companies that if they had affordable electric vehicles on the market this year, they would still be selling, right? Because if you had an affordable model there, then you need less government support, right? And what is a big tell is the EU putting the tariffs on the Chinese vehicles. And same over here in America, 100% tariff, higher tariffs than even Europe is putting on the Chinese vehicles. Well, you wouldn't need those tariffs if this demand wasn't there, right? Because like they're trying to prevent these cheap, good Chinese vehicles from entering the European market. Well, it can't be both things. You can't say, well, the demand is there, the consumer demand is not there. Sorry, they don't want these electric vehicles. They're struggling it. But if there was a Chinese 20,000 euro, 25,000 euro vehicle in Germany, I'm pretty sure Germans would be buying it. So how much do you attribute it to the OEM failure to really execute on this and produce high quality vehicles at a low cost?
I think that's an excellent question and observation, Kevin. And there are multiple dimensions to this, right? So one is looking at BYD, Tesla, the OEMs with only fully battery electric vehicles or plug-in hybrid electric vehicles in their automotive portfolio. So if you take Tesla and BYD and look at their portfolio, they are selling quite well. Tesla Model Y became the number one selling car in the whole world. Who would have believed that 10 years ago? And many of the mistakes of the conservative OEMs in Europe is what we see now, begging the European Union to postpone the new legislation coming up 2025. But with a disruptive technology as the battery electric vehicle, that transition is unavoidable. It will happen. So it's more a matter of time and the timing to it. And taking Volvo cars as an example, they come out quite well with the current market. But if you scratch the surface there, they have one of their platforms delayed more than 2.5 years, the SPA2 platform, which the EX90 and the Polestar 3 is built upon. If that would have been in the market for, 24 months ago, that had been, a home run for them. They are still doing quite well at Volvo cars, but it's not necessarily only because of their own skill. It's also the other OEMs in Europe failing miserable in how to manage that transition, and especially the automotive OEMs in Germany.
So I agree. For some manufacturers, it's a pivot. For other manufacturers, that's their game. They are battery electric vehicle manufacturers, so BYDs, etc. They know this industry. And I guess the other part is, to your kind of question, Kevin, about whether it's them just doing bad planning. I think also in Europe anyway, it's reached a point where we simply can't compete with the price of raw materials, with the price of manufacturing, with the price of the sites within Europe to the costs that manufacturers in China and other countries as well. Mexico, part of the Biden administration and also part of the Trump administration may be focused on tariffs also importing from South America as well. I think in Europe, the costs are simply too high for them to be able to compete. And perhaps I'm more worried about shareholders' point of view of sacrificing all of that fantastic profitability from their combustion engine sales to basically fund the transition to their EVs. And so maybe let's start talking a little bit about 2025 and what we kind of want to, or what we see as a group and our own kind of opinions on what 2025 will bring for EVs and also for EV charging. And let's start from the outside in. Let's start about geopolitics, because I feel like that has been one of the biggest drivers, right? Let's be honest, to whether EVs are the powertrain of choice over hydrogen, over other modes of transport. And I think it's very difficult to ignore everything that's been happening in the US. And now, at the time of this being released, right, the Trump administration will now be in seat, or will about to be in seat. It may be in a 2 weeks' time. I'm looking at Kevin, he's kind of crossing his head. So middle of January, right? Trump will be in. So maybe my question to both of you is, what effect do we think this is going to have? Let's try to break down tangible scenarios of the Trump administration and what policies they might try to address and how that might impact EV adoption in 2025. Maybe, Rikard, do you want to kick us off?
Yes, we could start from macro perspective. So we have the trade war, US putting 100% tariffs on Chinese imports, the European Union being a little bit squeezed in between US and China. We have a quite advanced model to calculate how much the Chinese OEMs has been cheating, and it's between 7 and 35%. I would love to see how you can come up with that exact number, but that's how the European Union classified different OEMs in terms of the Chinese subsidiaries they perceive that they get. So that's setting the scene in terms of where we start with in 2025. From a macro perspective, we also have the declining interest rate, which will be beneficial to battery electric vehicles over ICE vehicles. So we have a higher price point and a higher cost of the vehicle, and with a financial lease that will be punished with a higher interest rate.
I guess my question should have been, before we get to policy, let's talk about the macro and material trends, because you're right, there are things that are affecting manufacturers directly in the price that they can put their vehicles out. Then let's focus a little bit on the US now, because huge vehicle market. And even though we say at the end of this year, the vehicle market ended at 10% EV sales, that is still a shot above the majority, if not all, European markets, right? The annual sales volume really is kind of Germany that even starts to come close to those. So the just absolute size of the US is big. And that, of course, affects the kind of global supply chain. So maybe then what are your thoughts around how the Trump administration and maybe other also kind of right-wing type policies in Europe as well, how do you think that's going to impact EV adoption in OEMs?
My reflection from the election is that it wasn't a climate conversation in the election. You're absolutely right. The climate movement is, of course, in Trump's phrasing, something woke and, should be reversed. In reality, when we have a notorious liar, we shouldn't necessarily trust what he's saying. Rather, look at what are the scenarios, what do we believe that the Trump administration will do. Maybe I come up as a little bit too positive on this side, but we have a new society with oligarchs in the US. Elon Musk is best buddy with Trump. And what influence will he has in terms of the transition to electric vehicles? I'm positive that he will have a positive impact on the policymaking in US. I think that at least Tesla won't be impacted. That was at least the market's expectation the day after the election when the stock bumped quite significantly.
Just for Tesla.
Just for Tesla. Just for Tesla. And if we continue to drill into that, we have the Inflation Reduction Act in the US, and that has created huge investments into the US. And if you read Donald Trump as a businessman, we have a pattern that he will do what is good for business over in the US. Will he completely reverse the IRA? I'm not sure. At least it will be quite tricky for him to fully reverse back that. And also, what are the states that benefit from the Inflation Reduction Act, and how will that impact his legacy? So I'm quite positive that it won't be as bad as we're told here in Europe with Trump, at least not on the electric vehicle side. And a scenario that you should put into your game board is what happens if Donald Trump is supporting the US transition to full electric vehicles. That is a play against China, reinforced by his advisor Elon Musk, and that this actually frees up volume of oil and gas to become, a global supplier of oil from the US. If we take one example of the commercial vehicle side, we see quite strong indicators that Tesla Semi is coming out in 25, and that will accelerate the transition of electric trucking in US. They have done tremendous testing together with PepsiCo and other lead customers in the US. That is also something that will strengthen the industry.
We like optimism on this show. We like keeping it light. And I think there's quite a few things there that I agree with. But maybe, Kevin, what do you think?
There's a fair bit there to unpack. I think right now, depending on the day and how I wake up and what side of the bed I'm on, I can squint and I can be optimistic. I can squint and I'm pretty pessimistic. Like we just talked about, Rikard, what do automakers like and what do operators like? They want certainty and they want predictability. And I think that's where I struggle a little bit with, among other things, the Trump administration, is they kind of inject this uncertainty for the OEMs, right? The American auto market is kind of its own unique island over here of SUVs and crossover, vehicles. Ford doesn't even sell a sedan over here anymore. I think Chevrolet sells one sedan over here, right? They've got these high profit SUVs and trucks, and they've kind of been addicted to the profits of those for many years and let Tesla kind of come in and take their lunch, basically. And there aren't that many models right now that are coming out, but there are more coming next year. So that does give me some optimism, right? The models that come out in 2025, they're slated to come out regardless of who's president, right? Those decisions were made many years ago to spin up a factory and start making those models. But we talked about the affordability gap still, right? A lot of these vehicles are still north of $40,000, and that $7,500 tax credit, it is a good bridge to make these more affordable. And that's a little bit up in the air. He really has talked about removing that potentially or tweaking the qualifications for it. And that could inject some uncertainty into the market and into these automakers and their planning going forward. And that's just the automaker piece, right? There's also the investments in charging infrastructure over here. It's supposed to be $800 million to $1 billion every year going forward for the next few years. That's supposed to really spur the necessary investment in charging infrastructure. And those funds, if the administration doesn't want those funds to be spent, they can pull some levers to really prevent them from being dispersed. So you talk about more uncertainty for the CPO side of things. I think objectively, it's hard to see the story where his election and his administration really boosts the industry forward, like really like passes a law that's going to really do more for it.
I think what you said at the end is a pretty fair prediction, right? I don't think the Trump administration is going to revolutionize or provide additional boosts to EV adoption or electrification in general. As we move from policy to consumer-driven sales, there is usually a bit of a lift, particularly if vehicles aren't affordable. And then the other part is, Kev, you and I spoke a bit about this, is, so at the moment, California has its own sovereignty in determining what its emission standards are, and as a result has been able to really pave the way ahead of other US states in their adoption of electrified transport, not just EVs. And then other states have been following that standard. If the Trump administration is starting to target that and mean that they can't determine, I think it's the CAFE or, the CAFE regulation. If they start to target that, and it means that states, California and other states, can also be more flexible in how they set their emission standards, we might start to see more disparity in how individual states look at electric cars.
One point maybe to wrap up the section is, like I mentioned earlier, is Florida, where Manta has the privilege of being located in this beautiful state. Well, it's nice. I walked into work this morning in shorts and flip-flops, and it's great. But what I said, Florida is 23, 24 million people. No one's saying, wow, Florida, EV capital of the USA. But it's the number 2 state in volume, right? And so there is just the sheer size of the American market that's not going anywhere, right? So it's 350 million people, and it's 10% BEV share this year. I don't know exactly the used car share. It's 10% next year, whether it's 12%, whether it's 15%. That's still a few million vehicles are being sold next year, right? That's still a very large market. There's still going to be chargers that are going to be utilized. We see CPOs turning the corner and starting to get meaningful utilization right now. And so while there's not an accelerator going to be pushed down from the Trump administration, you still have a very large market that's going to have millions of electric vehicles sold next year. I don't think it's going to go completely in reverse. Correct me if I'm wrong. If we talk in a year's time and it's 3% sales share, then I'll be proven wrong. But if it's 10% or 12% or 15% next year, that's still millions of electric vehicles sold. That's still millions of chargers that need to go in the ground and service these vehicles.
We've talked about policy and what 2025 might look like, but maybe let's talk about it from the consumer's point of view, from the other side. So, Rikard, thinking specifically about, your day-to-day consumers, people who are considering purchasing now a, battery electric, a hybrid, a combustion engine. They've kind of been on the fence for some time. I've had some relatives, Kevin, you've also had some relatives who have recently purchased a hybrid vehicle, and I'm a bit upset with them because maybe if they've just waited a little bit longer, they could have got a battery electric and then played their role and also downloaded Monto and been able to charge their car at home. But maybe, Rikard, what's your point of view about how 2025 will look differently to your day-to-day consumer who is considering a new vehicle?
They will be in a very good place with all the new EVs coming out on the European market, if we start there. So we have the smaller B and C segments, which the automotive OEMs has held back to drive profitability on their existing product lines and the more expensive D and E segment BEV models. And then we had the conversation around the price point. So consumers are not necessarily total cost of ownership or TCO oriented as the commercial vehicle segment. They're rather looking at the sticker price. But what we will see 2025 is the price parity, that you can choose an ICE or a BEV car and it will be more or less the same price. With declining price point of battery cells coming into the automotive programs and also the push from European Union on the automotive OEMs to get the volumes out there. So from a consumer point of view, 2025 will be bright.
Fantastic. I agree. I quite like your point about how, for the private sector, individuals aren't as focused on total cost of ownership.
You need to take the Tesla method of price listing. You ever go to their website and you see like they put this like ridiculously low price, but then you click on it and when they break it down, they're like annual savings on gas. And they put that, so it's like they factor that into what the cost of the car is. It's like, you don't get to do that. That's not the sticker price. They're like, you would save $1,200 if based on an average cost of electricity versus an average cost of a gallon of gasoline. This is how much you would save on gas next year. So this is what that car actually costs. It's like, no, it doesn't.
That's not how my wallet works.
But that's the price you pay for the gas. But what about the repairs? Have you any sense of how expensive it is to drive a 5-year-old diesel car? I mean, it's ridiculous how much you spend on repairs, and you don't do that on an electric vehicle. It's a different ballgame. But people are not necessarily that rational when it comes to the cost of owning and driving a car.
So on the whole, 2025, it's going to be an attractive year. EVs will look more attractive to the day-to-day consumer and also to the mass market than they would have done in 2024 and before. Right? So then I think one of the questions that we touched on in the first part of the podcast was the knock-on effect to EV charging and specifically charging operators. We work with operators operating fast charging networks, offering destination charging, business workplace charging. We work with turnkey solution providers or network operators, as they're kind of termed in the US. And of course, their leading indicator of what success looks like and how quickly they will grow is ultimately EV adoption. 2025, it's going to be the heyday for battery electric vehicles, at least in the eyes of the consumer, right? It's going to be much more attractive. How are operators discussing this and talking about it, and how exposed are they to instabilities in EV adoption?
To your point before, Kevin, they don't like uncertainty from an investor perspective. You want the predictability, you want your curves in your Excel models to be very smooth, and you want to track your baseline to the predictions and the updates you do on a monthly or quarterly basis, right? So what we see now is, I would phrase it as disturbance on the curve. It's important to come back to the underlying S-curve adoption, and that we drill down into regions or markets, but also specific segments. That's when you start to get the true understanding of how this transition works. So when you have your model in place and you have disturbances on it, that creates uncertainty, and then you start to assess, are we right with the fundamental strategy and direction we have taken, and what are the short-term measures we need to take? It's also the external factors to it. So many CPOs out there are looking into a profitability conversation. And if we break that down, we have the volume times the price. And volume is, of course, how can we drive traffic to our network? What are the measures we can take in place in terms of working with roaming partners to drive incoming traffic? How can we partner up with the right players in the market to gain the ecosystem effect? Then we have the pricing part, which is quite popular these days, and how you can work with pricing strategies, how you can work with various models, and how you can unpack that price elasticity, and also utilizing different business models to lock in the customer to your network. And then we have the cost side, so both CapEx and OpEx. So starting with the OpEx, how can you run an efficient operation? I think that this is often where you guys come into play, that there's so many hurdles, hassles, pain points as a CPO to run an efficient operation in terms of getting your software to work with your hardware, creating the right type of customer experience, lower the barriers and pain points to get charging started, and all of that. So that is how, for example, players like you and Monta come into play to lower some of these barriers. If we look at the CapEx, it's how you can optimize your investments and the rollout of your infrastructure. And often this is something we want to design as effectively as possible. We also have an upcoming exciting year from a market consolidation perspective. So we foresee that we will increase the number of M&A activities. So more acquisitions in the market, driving consolidation, getting the scale out of the operations. Another interesting element is that investors doesn't like the uncertainty. And we have seen quite interesting patterns from the renewable energy sector and work we have done with clients there. We have only seen the beginning of that in the charging business. And we had quite many interesting conversations around how could charging infrastructure evolve into an asset class and how can we attract capital into the segment. Many of the players today build it on their own balance sheet, and that is part to the uncertainty in terms of how this can evolve. But if we can get charging infrastructure as an asset class and attract new investors into this space with the right type of models to shift over uncertainties, that will create more predictable cash flows for the investors and also lower the cost of capital.
It's a lot that could happen, but I like it. So for operators, you kind of mentioned that, or started to allude to, mergers and acquisitions next year and consolidation. And then I guess marrying that with an increased focus on the need for profitability. It's not realistic that businesses will be profitable next year necessarily. There's only a handful, the Allego, the Fastneds of the world, that are starting to display positive EBITDA. But of course, the return on their investment is, 7, 8, 9, 10 years, even more as they continue to kind of grow out. But I guess, for investment going into the market, a lot of that uncertainty is driven by whether people are actually purchasing EVs or not.
Totally agree to that, Mike. And I think that for the ones who have got it, it's not a question if it will happen. It's rather the timing to it and what degree of uncertainty can we bear in our bet on this one.
And then maybe one of the questions, from all the business models that you've built, all of these profitability models that you've built with operators, this might not be an easy question, so I also understand that. But what are the specifics of business models that you've seen to be successful versus those that have seen to be unsuccessful? What are some of the specifics that you've seen to be the indicators of successful versus unsuccessful operators and business models?
That's a super exciting question, right? So I think that simplified the AC/DC strategy is quite straightforward. I think most of the CPOs who did the back of the envelope calculation landed in the profitability of the DC business compared to the AC charging business. But that's also a little bit to oversimplify things. It depends on what is the business model you have selected for the different segments. And just to illustrate that public AC charging at work or at destination, as we frame them, is probably different if you take the utilization risk yourself or if you sell a subscription model. And then if we take the public DC charging, it's of course a utilization game.
Yeah.
How can you optimize the utilization in your home network, getting the right amount of chargers into the best locations, fight off competition, but also the long-term, short-term perspective on it. I think we'll see that, and Per Möller brought it up in a previous podcast you had, that it's a scale effect with several different players. It's a little bit, how can you cater to the customer needs with differentiation and what are the different customer segments you can target with it. So I think that there are many different alternatives in terms of the business models and connecting with the right type of partnerships and driving the short-term and long-term profitability of your business.
Yes, thank you. It's not an easy topic to unpack. There's so many different variables. And I don't know how big this Excel model is that you're working on and that you work with clients to try to understand mix of charge points, locations, average price per kilowatt hours, network rates, installation costs, amortization over 7 to 8 to 9 years. Yeah, there's probably tons of stuff that starts to go in there.
But it's quite straightforward. I mean, for your clients to design a winning strategy, you set what is your winning ambition, then you design your market game board. Where should you play? Answering the question, how will you win in these different segments? Looking into what are the right capabilities to have in place. And also, how do we design our operating system? That is your 5 key questions to outline in your strategy. And then it's just execution, right?
So, Rikard, as we are now looking ahead to 2025, quite a bit going on. And, we talked about geopolitics, the macro environment, the micro environment of these charging operators, right? As they're trying to get their model right within these, big macro forces of vehicle OEMs and incentives and government policy decisions. Looking forward to 2025. Do you have a few predictions for us? It could be related to the vehicle OEMs. It could be related to the operators. What do you think is going to happen a little bit in 2025? We will not hold you to it if you're incorrect in 1 year's time.
Won't we?
It's a beauty with a prediction of the future. You know that you will always be wrong, right? But first one, Donald Trump changed his mind on EVs and he will love them. Second one, Europe will bounce back and we will hit the 25% EV sales mark. And the third one, we will see a consolidation of the automotive OEMs in China. We have more than 400 battery electric vehicle OEMs in China, and we will see a huge consolidation of that market. So probably end with a maximum of 10 global Chinese brands.
I love your optimism. The Trump administration is not going to change anything, and EU is going to bounce back, and Germany is going to find some money in their couch cushions for electric vehicles. Sweden will as well. That's good. I like the optimism. I'm here for it.
I tend to agree, at least with the kind of bounce back. I personally think, at least maybe in Europe, this is also my prediction, right? For in Europe, I think 2025, we'll see a return to growth, but also in most markets, it will actually be a booming year for them because of reduction in battery prices that get passed on to the cost of vehicles, the CO2 emissions, and maybe also some reintroduction of some incentives for people to purchase. I think it's going to be a very exciting year for EVs.
Was it Italy, Mike, where they introduced it and they ran out of money, or the fund was like in a week or two, all of a sudden they're like, oh, we're going to put some incentives out there. Here's a pot of money for electric vehicles. And they just snapped it up like that?
Yep, exactly. Italy was like that. They've just renewed actually a new set of incentives that they want to try to now roll out. Spain also is going through a renewal of its program, but its problem was not that the subsidies got consumed too quickly. It's that the actual vehicle to actually deliver the cash into people's wallets wasn't correctly set up. So whilst people applied, it took them over a year to be able to get their cash. And of course, when you're looking to purchase a vehicle, that doesn't work. And then in the Netherlands, that's another country where when they rolled out the incentives in 2023, they were all gone by the first quarter. So I think that just shows how important these are to individuals. Kev, your predictions? When you woke up and you squinted on the side of the bedside this morning, were you on the optimistic or the pessimistic side?
So I was a little early here. We started recording here at 8 a.m. I didn't even have my wits about me to be optimistic or pessimistic. We're in this industry, all three of us, and we want to see growth in this industry because that's good for our respective domains and businesses, but it's also good for the planet, right? To see, the adoption. Mike, I shared a chart with you. We see the path that the world needs to go on in terms of EV adoption. We're slipping behind a little bit. So that was a pessimistic day yesterday, right? When you read that chart. But like I said, I don't have a hard prediction. It's going to keep growing and there's going to be money to be made out there. And I just think the big challenge, Rikard, like you mentioned, is getting ahead of it, but not getting so far ahead of it that investors or shareholders get impatient, right? And so it's trying to, Monta, we have that challenge. CPOs have that challenge. Automakers have that challenge, right? And trying to marry the ambition and the getting ahead piece of it in a space where you are somewhat dependent on some government policy and everything is very challenging. But those companies that can really get that balance right of investing and putting things in the ground and getting the models out there and getting the right business models in place, but not so far ahead that they burn all their cash, right? Is, I think, going to be the biggest challenge in 2025. And you're going to see the companies that succeed are going to be the ones that get that balance right. And the ones that consolidate, the ones that fail, are going to be the ones that couldn't quite get that mix of factors correct.
Yeah. I think consolidation's, super interesting, right? It'll be like investors start to get impatient. Let's grow. There are these fledgling companies that are starting to struggle and looking for an exit. That's a form of inorganic growth. Then we go after it. And it's more like a vehicle of trying to stay on the same trajectory whilst, I guess, taking advantage of some of the companies that unfortunately are starting to fall behind. All right, let's wrap this up. So final question. This is what we like to end every single podcast with. It'd be interesting to see how many different myths we're kind of busting. But Rikard, the final question is, if you were to bust one myth about the EV or the EV charging industry, what would it be?
There would, of course, be that hydrogen won't play a significant role in the transformation of the transport system. It's just basic physics. Energy efficiency is less than 30%. Fully battery electric vehicles is more than 90%. It doesn't make sense from an automotive OEM perspective to push the hydrogen agenda. It will be a niche application in specific heavy-duty trucking segment, and CPOs shouldn't worry or bother about that. It creates an unnecessary uncertainty in the ecosystem. So let's bust that myth.
You're singing my tune, Rikard. I've been banging that drum for a couple of years now, and
thanks for pushing it.
Absolutely
Kevin.
agree.
It's 9:30 in the morning in the US, and Kevin is popping the proverbial champagne. Also, that hydrogen is not the way to go.
Excellent.
Yeah. I think people should stop wasting their time, money. There's even some governments that have incentives for it. There was something in California, maybe they have something, Japan or Korea, they're trying to incentivize. Just stop it. Just stop. Like, we already have a technology that works. We don't need to worry. But yet some people continue to do it. So, but I agree with you 100%, Rikard.
Fantastic. All right. Then, Rikard, thank you very much for coming in and having a super strong and detailed discussion with us about your thoughts for 2025. I love the optimism. We here also love the optimism. And I guess the conversation back out with operators or businesses looking to set up shop or continue to grow this year is that the future is bright. So thank you very much.
Mike and Kevin, thanks for having me. Pleasure.